Hey everybody, it's Mike. Welcome back. It's just coming up on 2 o'clock Central Time. Get started here in a minute. I said I'd start at 2, and I want to make sure everyone that's making the effort to come in this afternoon is going to be able to take advantage of the information. Just really quick, I saw there's a question there, Amy. What is the link to the members to watch the replay? I'm going to send that out later this afternoon, but I'll post the link in here for you. Let me just pull it up. Because of the first session went about just over 2 hours, and by the time it finished processing the video on GoToWebinar and I was able to download it, it took literally about 2.5 hours. So I've got it uploaded, but I haven't uploaded to the page yet. I've uploaded it to the host, but I'll get it up there after this session, and then this Q&A period will get posted up later tonight. But I was going to put the link in here. Check it, in an hour or two. Let me just, I'll put it in the chat. Let me just open up the chat real quick. Okay. You can see it's really simple. It's just orderflows.com/masterclass/replay.html. And after this session is over, I'm going to post the morning session in there. Then later this evening, once this session is complete and the video has been rendered, I'll download it from GoToWebinar and I'll upload it to this page so that you'll be able to watch it again. Now, just give me a second here. Let me get some water. Make sure I don't start coughing on you. All right, so earlier, after the session was over, I did get a couple questions via email, and one of the questions that was asked was Henrik earlier in the morning session, and I just want to address it really quick because this is obviously the difference between using a time-based chart and either a volume-based chart, a tick-based chart, or a range-based chart is once you use any of the last three, tick, volume, range, you're sort of disregarding the time. Okay, range is obviously based on price movement. Tick is the amount of trades that go through. Volume is the amount of volume that goes through. And the charts oftentimes can look vastly different. You can see some bars take longer to form, some form very quick. And for example, if you remember this 913, right? We formed basically 1, 2, basically 3 or 4 bars within just a few seconds, right? Whereas if you're looking at a minute-based chart, it's just going to show as 1 bar because it's within that time period. And what Henrik was asking is, on these other types of charts, if you can add in at the bottom somewhere down here, sort of a how we register the volume, the delta, etc., just the amount of time it takes for the bar to form. NinjaTrader, you can do a lot of things. I'm going to go back to my programmer, see if that can be done, and if it can, we'll be looking probably to add it in the next release, or we're coming up on year end, so there's probably not going to be any updates pushed out before the end of the year, but definitely first quarter. If it can be done, we'll be looking to add it in there. Okay, so Henrik, thanks for that. Thanks for that suggestion. I think it's a useful suggestion because it's going to help you see if the market is moving very fast. If there's some volatility in the market. I saw a funny post. What's the VIX doing right now? The VIX index. So there's a tongue-in-cheek post. VIX is, what are we doing? Yeah, we're up about 7% today in the VIX, 2460. It's up like 1.7. But the post was funny. He says, the market is so bullish, even the VIX is up. That's something that only a trader, I think, can appreciate. And I got another question here from Kevin, and this is something that is a very valid question. I'll just read it really quick. Let me find the part here. Can you go over your daily trading plan strategy using order flow? Question mark. Recently, I hear an intraday trader stating his daily goal is to execute his daily trading plan, and that's it. I specifically said his daily goal is not to make money in the market, but to trade and execute his trading plan. Which Kevin agrees with. Yeah, I agree that you should have a process. It goes on to say every trader needs to have a trading plan with exact rules on when to enter and exit. If the plan is consistent, then the trader executing without deviating from the daily trading plan should make money on a consistent basis. And the point is the consistency, right? I mean, it's easy to make a trading plan, but the hard part is for a trader to follow it, right? It's one of those things you really, traders need to learn to be patient. And sometimes it's hard to be patient when the market's moving. Right? You're like, oh, I should have got in. I was scrolling through Facebook or something, and I sort of missed my entry point. Thing to bear in mind, the markets have been around for well over 100 years. Chances are, barring some major catastrophe, they're probably going to be around another 100 years, right? So the important thing is the market will be open tomorrow and the next day and the next day. So missing a trade isn't the end of the world. Don't force yourself to get long or get short, after you miss your entry, okay? It's just one of those things where that often will lead to some form of disaster. Now, that said, do I have a set trading plan? No, I have a process. It's for me, it's more about the process, if you will. What I go through on taking a trade, even from the time that I get up in the morning. We all have processes, right? That's how successful athletes, certain ones, that have the talent, are able to excel is because they follow a process, right? It's not, having talent is one thing, but you got to know how to apply it. And I'm fortunate that I was able to get paid, at a professional level, trading. And I was able to sort of work out my process there. I'm not one of these guys that could just sort of come in the morning, turn on a computer, and then within 2 minutes start trading, right? I sort of want to go back, see how the market has been trading. Has it been making any, sort of unexpected moves, or for whatever reason, has the order flow been normal? Is basically what I'm looking for, right? And most of the time it is. It's not like it's you're going to come in most of the time and things are going to be, having absurd moves. If anything, markets are going to be generally a little bit quieter. Tomorrow is going to be an interesting day. We got tomorrow, I think, CPI coming out. Obviously, it's a big number. Everyone is looking at the inflation number. Will it go down? Probably. I mean, I know the price of gas has been going down where I live, which is nice from from a driver standpoint. And I'm sure the Democrats will take the time to tell you how great the economy is doing right now. And then I think we also got the FOMC on Wednesday. It's these things that come fast and furious. Every day is a new thing. So I'll be watching that in the back of my mind, that I know that I have to deal with those numbers. So I know that we have some potential market moving news coming out at a certain time in the morning. It was at 7:30, I believe. So I know that when I wake up in the morning and I start looking at my charts, it could be very quiet in the sense that there's not a lot of movement, right? Because everyone is waiting for the number. And then obviously after the number, things could potentially go berserko, and it could be a flow-driven one-way market. Okay, so that's part of my process, understanding the potential conditions that we have. I don't have that written down. It's just sort of ingrained in me. I know that that's what I have to do. Now, as far as setups, which is what this afternoon session is going to be, I don't have just one setup that I'm looking for. I mean, you could, right? But you can't, in my opinion, you can't just survive off of one thing in the markets. I mean, you can probably in the short term, but in the long term, you got to realize, there's different type of market conditions, right? We could be in a sideways market, and if you're in a sideways market trying to trade breakouts isn't going to work. If you're in a trending market, trying to find reversals is not going to work. So you do need, in my opinion, a handful of situations that you're looking for in the market, and I'm just going to go over them today. I'm going to actually plot them down on a document file for you that I'm also going to upload into the replay section. So I'll do it all fancy for you guys. I'll do screenshots and everything, in my own whatever mental notes that we're going through at the time, just so you could take away some of these setups and look for them yourselves, right? Because at the end of the day, that's what you want to. That's why you're here, is right. You want to understand what to look for in the market, because we're only going on for 3 days, and I don't know what tomorrow is going to be like. With the market could just be too volatile, and we'll see. Hopefully we get some trades in tomorrow as well. But let's go over these trades here real quick. Let me see here. Before I do that, let's take a look at these questions. Ignaz, do you trade later than 2 p.m.? Not really. I when you start getting later in the day, it's kind of like almost, I'll say, a different market. I mean, you do get some very nice moves. If you remember on Friday, there was a crude oil rally like $1.50 in the, from basically 1 until 2, or just after 2. Equities, you do get moves. If it, I sort of have this old school mentality. After 2 o'clock, when I was on the floor, right, it was in the Deutschmarks, and it was currency pits, right? It was Deutschmark when there still was a Deutschmark, and then Swiss francs and yen and the Eurodollars, right? The interest rate short term, that was closed at 2, right? Then downstairs was the equities, and equities went till what was it, 3:15. So I always finished by 2 o'clock, and a lot of the dealers, right, the cash dealers, the bond brokers, 2 o'clock is when their markets close. Gold and what was it, crude closed like at 2:10 or something ridiculous like that. But for me, after 2 o'clock, I'm really ready to wrap up. My kids will be coming home from school around 3. Sometimes I got to pick them up. So after that, I don't really watch the market. There are nice moves though. Okay, it's not that you can't trade. Now this is the thing, just sort of talking about after 2 p.m. For those of you that watch VWAP, now VWAP is a useful tool. It has its uses, sort of as unfortunately a lot of people use it more as a moving average, but later in the day, VWAP is going to flatten, right, as more volume is appearing there, and so it doesn't carry that same weight that does, in my opinion, earlier in the day. But like I said, a lot of times you do get some major moves late in the day. I think Thursday we had a sell-off in equities, after 2 o'clock. So it's just whether you can or not. If you sit in front of a screen all day, you do get tired, right? You want to perform at your peak performance, and part of your success is knowing when you're going to perform your optimal at your best, right? Your mind is going to be the sharpest, and there's no sense knowing no one's chaining you to a desk that you have to trade from this time to this time. I mean, if you can only sit down after 12 until 3 o'clock, then or 3:15 Chicago time, then do that, right? Because there are movements to be had there, right? It's just, for me, I know my optimal time is earlier in the day. Chris, unemployment is low. Yeah. Let me see this other question. When you're, hang on here, I gotta open this up bigger. It's kind of scrunched. Okay, when you're trading on your own, what is your setup? Okay, so my setup, I've got a couple monitors. There are 3 monitors on my trading system. They're big monitors. They're 43-inch monitors. I tend to put it in 4s on one screen, and this morning I had 6 going up, but generally it's 4 on one screen and like 8 smaller ones. I'll keep the 4 main footprints that I'm looking at on one screen. The other screen, I'll just have a bunch of little candlestick charts, right, with sort of my other order flow tools running on it. Do you have more than one chart open on a single instrument? Yeah, I do have time-based charts. I do have volume-based, not volume, time-based charts, and I do have range-based charts. So again, it's here, right? If you were to just open this up, this is ultra bonds, but again, I'll just show you really quick. Ultra bonds today, the 5 range in the 1 minute, there was nice little differences in there, right? So just this is why having it on another screen, I can't stand these people say all you need is one screen to, if you have more than one screen, you're just what's the word? You're trying to make up for shortcomings or something. No, really as a trader, it's about being able to see things that nobody else can see. Right? If you sort of have this tunnel vision, I'm just looking at price and nothing else. I think you're leaving a lot out. Okay, I know that when I was at JP Morgan, we had 4 screens, and then I had the opportunity to go to 8 screens after they started letting go a bunch of traders and stuff. So we had all these screens. I said, hey, I want those. Then all my colleagues, were sort of scoffing at me. Then they saw it, and then everybody else sort of jumped on it as well. But sort of going back here, right? This is or actually, let me pull up a 5-minute chart here. 5 minutes on the ultra bonds, right? This is this morning, right? You had this nice double top. This is something I talked about earlier, which happened on the buy side. This is the sell side. It happened in the euro currency, very similar, right? You had this double top with the exhaustion print the second time around. You have the sort of the abandoned value area coming in here, and the market sold off on the. This was at what was that between 8 o'clock and 8:40 here on the. This is was it the 5 range chart? It's kind of similar. You got you've got the divergence, which I don't think you had. You didn't have that divergence here the first time around. I mean, same volumes, obviously, but the different bar type. You still have that single print because you're going up towards that area. You're still left with that same exposed value area, right? That abandoned value area, and it starts coming off. Here you can sort of see it start coming in. Now there's some nice things as well. On the 1 minute chart, you're not going to see that. It is there on the 5 minute chart. I do have a 5 minute chart for some of these other contracts open. And again, it's not like I'm constantly flipping, right? I'm really focused on one chart, right? The footprint chart on the range-based chart, right? I come into the day, that's what I'm looking at. If the market isn't really doing much, if there's not much going on, that's when I start to look at another chart, say, hey, you know what, am I potentially missing something? Or maybe is there something showing on a different time frame that's maybe a little more actionable? If you're looking on the range-based chart, right, and it's just going sideways like this, there's nothing tradable in here. Okay, not until you start coming up that you start to see something happening, right? And it's when the market's in this time period that I'd be looking for something to happen, right? Because why? Well, just looking at the delta, right? This was our high of the day earlier because you have that divergence. But I'm seeing all this negative delta come in. 1 bar, 2 bars, 3, 4, 5, 6. Okay. Why isn't this market selling off with this negative delta? It's just hanging around. Okay. So again, that starts to get me think maybe there can be a move to the upside potentially, because maybe someone is absorbing all the selling that's coming in, because you're left with the negative deltas, negative deltas, negative deltas, but the market's not going down. Deltas getting stronger in a sense. I'll say getting much stronger, but we're going from basically from here, negative cumulative delta is minus 7,000 to 7,022. And then it actually dips down to minus 6,699, comes back up over here. We're still at minus 7,028. So you're doing all that churn sideways, and market's not going anywhere, right? So again, that's something to keep in mind. So it's just bear that in mind. Okay. I'll tell you what, for now, let's go through a couple more questions here. Yeah, so Horatio, and to answer the final part of your question, there's a core group of markets that I look at, right? Currencies, interest rates. I do keep, yeah, I have to keep equities up, right? A MES chart to look at. I don't look at NQ or MNQ. I mean, I do have the ticker on my screen, but I don't keep a chart open for that. It's one of those things, right? Your brain can only process so much information. I don't want to be overwhelming myself with having available a market to look at. Down, I'm probably not going to trade. Okay, it just doesn't really fit into my trading plan, if you will. Okay, I just find there's plenty of other markets out there that are more, I'll say easier to trade, but not as crazy to trade, right? In the sense of price movements, right? It's nice to, in my opinion, to trade a market. It's easier to trade a market that it's going to have genuine moves rather than these herky-jerky moves. For example, if I were to, well, let me just pull up real quick. Let's pull up the MES chart to sort of give you, where are we here? The comparison is, right? Yeah, does it follow order flow? Yes, it does. But you're getting, oftentimes very quick moves. Now it's kind of slowing down. We're sort of getting into the last 30, 40 minutes of the day. But, there's going to be these moves that can happen, really quick, really fast. If I had a 1 minute today, I said today's Monday, which is, out of all the trading days out of the week, is probably the most tame. You can get bars where it can move 10, 15 points. Okay, I'd rather not get stuck in a market there. I'd rather have something that's going to move a little more calmly and a little more orderly. So yeah, coming into the day, I know which markets I'm going to trade, or at least watch, then trade. And they do vary. Sometimes the currencies drop out and something else goes in, or I add something else, right? Like I got bonds, ultra bonds, euros and British pounds. But I get times where I'm like, I just going to, I'll start, because I also trade at night in overseas in palm oil. So sometimes I'm always like in the back of my mind watching what happens in the U.S. with bean oil and soy meal. I prefer soy meal much better than bean oil on the Chicago Board of Trade. But sometimes I'll spend days just trading those instead, right? Until I sort of get tired of trading the grains and I just sort of go into something else. But it varies. It varies. Is there an update for us to do the new version NT8? No, the Antonius, the NT8 upgrade won't affect the order flows trader. Vadim asks, how would you approach trading crude oil? What range time would you use? Crude oil, honestly, is a little bit more volatile, so I will go with 30-second. A 1 minute chart on crude, in my opinion, is. Let me get crude up here. Crude, here we go. 1 minute. Again, for me, I'm more of a shorter term trader. If looking at a 1 minute chart, where are we here? Go 1 minute. Let me expand this up. You're getting, now because it's 2 in the afternoon, it's quieted down. But during the regular day session, you're getting some, bars 82 up to 22, 40-cent bar. I tend to cut down those markets. That's why I like things like equities. I look at 30-second charts. If I was going to look at a range-based chart, I'd probably use like 8 or 10 for crude oil. Do you use Bookmap as well? No, I don't. Bookmap, has its uses. Don't get me wrong, it's a decent platform. NinjaTrader, they have on the paid version, what's it called here? I don't keep it up anymore. But it's, what is that? It's the market depth, order flow market depth map. They conveniently threw the word order flow in front of it, I think, to attract order flow traders. There are certain things to look for on something like Bookmap, right? There are, patterns in the, if you will, patterns, but really how you're looking at it is you're looking for those sort of areas where I find something like that to be useful. But again, I don't use it. This sort of question sort of came back, going back to it this morning. There was a question on, do I use a DOM, right? If you're in a trade, and this is where having a Bookmap is going to be useful. If you're more of a longer term trader, a swing trader, or somebody who's going to hold trades for a couple hours, it's nice to know where, where this liquidity is, because if you're in a position, say you're long from 18, but you see at 32, there's a big offer, 33, there's a big offer, 34, there's a big offer, and your target's at 45, you got a lot of work to do to get through those levels to get to your take profit. That's, one of the ways that Bookmap, a tool like Bookmap, is going to be useful. Okay, but again, trading on a DOM, trading on a heat map or a Bookmap it's a skill, right? You do need some screen time to, I say master it, but become good enough to use it effectively. Okay. How many markets do you trade daily? Which markets? What determines which market you'll focus on? Same order flow rules? Yeah, more or less same order flow rules. Like I said, whether it's euro currency, whether it's bonds or gold, crude oil, I'll be looking essentially for the same things. I try to stay in sort of a group together, or like British pound. British pounder, a couple months ago was moving a bit, was very volatile, and it had some very nice movements. But I tend to stick to like the currencies or bonds or grains like that. I don't like to stretch myself too thin. Right, you saw me today was British pound and euro currency. Right, I stayed out of the bonds today. Bonds had some nice moves. It's just sort of, I don't say getting dialed in, but just sort of being in sync with the market, right? Understanding it a bit better. Sometimes it's easy to get confused by watching a lot of different markets, and for most people, I'd say stick to sort of a core group of markets that you're going to look at. I mean, yeah, you can stick with one, that's fine, but I think most traders are comfortable to trade two. I don't even want to say potentially three, but for most traders, I think two is enough. One obviously is, you could just focus on that, but as you get more experience, I think you could go into two, right? Because at the end of the day, you're just looking for opportunities, okay? And sometimes one market may be a little quieter than the other markets, okay? But again, don't force yourself to start looking at, if you can handle it, by all means. But if you can't, stick with one market. Do you use higher time frame charts? No. Yeah, I'm one of the few people that will come in and say, I don't have this top-down approach. I don't look at the monthly chart, and then the weekly chart, and then the daily chart, and then the 4-hour chart, and then the 1-hour chart. No, I'm not, my style of trading, I don't need to look at the monthly chart to draw these references. I mean, how often are you going to come up on a monthly high, or a monthly low, or a monthly value area high, or a monthly value area low, or a weekly one? I mean, daily ones, yes, you will run into those, because it's the day one. I said I used to use the previous days. I've sort of dropped it from my trading just to sort of clean up my charts a little bit more, but I don't use it for context, because I don't like to come in and have this bias of to the short side or to the long side. I'm only going to take trades to the long side or to the short side, because what I've found is when I take trades, if I come in with a bias and I trade, I tend to fight the bias, honestly. I tend to trade bounces on days where, I should have a short bias. I'll take the long trades. So yeah, I don't subscribe to that top-down approach. I mean, there's nothing wrong with it if it suits you, but for my style of trading, no, I don't need to look at a monthly chart and a weekly chart and a daily chart. I said about as higher time frame as I go. It's 30 minutes. I do keep 30-minute charts open on a different PC for just follow things like Bitcoin. The crypto markets is people ask, does order flow Bitcoin follow order flow? It does, especially if you're looking at things like the value areas. You could monitor crypto that way. It's nice. Do you prep for each market? Example levels? No, I don't write down. I don't draw a lot of levels on my screen. Lately, I have been, since the advent of the new order flows trader software. I do have sort of these levels, being drawn out, but the way I trade levels is a bit different than the way a lot of, sort of the traditional method of trading levels. When a level is created, I know that that level is being created right now. This is my sign. I've got this bullish EVA, right, with the value area that's being drawn out. Actually, I have the bullish EVA here, right? Let me just change that to until tested, because it's showing as green, but I just had the bullish EVA showing in that bar, so that's why it's blue here. So I know that I'm generating a level here right now. I'll watch when the market eventually comes back down to it, but for now I know that I have this level, and the next bar it's holding. To me, that's like a go sign already. Go with this trade, as opposed to, okay, I drew out a level. I'm going to wait to see if the market ever comes back down to that level, right? And it didn't, right? The level is, what was it? It's down here. Okay, so rather than sitting and waiting for the market to come to a level, there's still plenty of trading opportunities, to be had in the market there. Do you use market profile as well? No, not in the traditional sense of a daily profile. I do use tools for like rolling profiles, anchored profiles. But again, that's only if the market isn't really showing me much, right? When the market is sort of quieted down, isn't making any movement, because when a market is sort of contracting, right, going sideways, it's generally balancing, right? And it's out of that balance that the big moves are going to be made. So, people I know will say, oh, the market's quiet today, there's nothing going on. That's when you should, that's when you can start looking at other things like profiles, volume profile or market profile, or, anchored VWAP or anchored profiles, etc. Because when we start coming out of that move or that balancing area where the market is just going sideways, then you're going to be able to position yourself much better, right? You can take advantage of those moves, and oftentimes, where's it going to go back to? It's going to go back to a previous balance area. So during the course of the trading day itself, in the heat of trading, no, I'm not necessarily looking at the profiles. When things quiet down, if the market's not really moving, then I'm going to start playing around. Okay, where is an area the market can move to? Ron asks, what's your favorite markets to trade? Bonds are great markets. There's different bonds. There's 30 years, there's 5s, 10s, there's the ultra bonds, ultra 10s, currencies, grains. There's a lot. I've had the luxury in my career to be exposed to a lot of different markets. And I just know that there's a lot out there that you can focus on, right? You don't have to necessarily be trading S&Ps or MES or NASDAQ. I know that's what a lot of people trade, right? But it's oftentimes the other markets out there that order flow is a little bit easier to read, in all honesty, than trying to, scratch your head looking at MNQ. If I can only trade one or two asset classes or commodity, what would I trade? I'd trade bonds. If I can only trade one, so Mike, I'm going to hire you to trade. You can only trade one contract. First one would probably be interest rates. Second one would probably be in the grains. Third would probably be currencies. Some down the list would be equity indices. It's not that equity indices can't be traded. They can be. I trade them from time to time, but it's just I just find other markets easier to trade in the sense of they follow order flow better because the people trading them for a purpose, right? To hedge something, right? To take delivery of something, as opposed to just a lot more speculation that is going through the market. But that's just me. Again, I know people that happily trade MNQ. So me, I'm like, why bang my head against the wall? So 6C, 6B, ZN, well, more ZB than ZN, ultra bonds. Yeah, next year I'll probably be doing some classes overseas at a bank I've been talking to. They trade a lot of interest rates, and one of the things is, they're traders. What they're doing is the nice thing about things like ZN, right? The 10 years, you can move a lot of size without moving the market. So, for these traders, all they got to do is they got to find that one point to sell or the one point to buy. They do 100, 200 contracts for 4 ticks. That's it. Then they're done. Okay, so that's the nice thing about things like ZN is you can move a lot of contracts with basically very little effect on the market. Crude oil is okay. I mean, crude oil is, it's, I'd put it in between. If I were to rank the contracts, I'd put it between MES and NQ, somewhere in between MES and MNQ. I'd sort of slot in crude oil. I mean, sometimes crude oil is a nice, easy contract to trade. Other times, it can get quite messy. But I mean, there are certain things that you could look for in crude that, when they happen, you can get some very big moves. Yeah, Euro stocks. I did trade stocks before. I mean, I worked at Commerzbank for years. Although when I traded Euro stocks, they didn't move the way they do now. Now they tend to move nicely, but when I was trading them, the 10 tick moves would be your whole day. But yeah, no, it is a nice contract to trade as well. All right, so let's keep moving on here. I see there's a bunch more questions. I'll try to get through these questions. I still want to recap the trades though, but these are good questions here. Please explain to me according to which logic the area is painted from the bullish point of control and or bearish in your chart. Okay, friends, if you're not using my software, you're going to have to I'll give you a more of a rudimentary lesson. Let me close this as a crude chart here on bullish points of control, bearish points of control. So what I'm going to do is I'm going to clean up this, well, rather than clean that one up, I'll just make a new chart here and clean it up. It'll be a little bit easier to show you because bullish and bearish point of controls are important. So I'll just turn off a bunch of these things here and just sort of clean it up into a nicer, easier to read chart. Turn that off, turn that off. I'll leave these points of controls on, prominent point controls, but I'll turn off a lot of the other stuff just so it's not distracting. Okay, one last one down here. Okay, so basically what you're left with are these bullish and bearish prominent point controls, right? You can see it's drawing out the lines. These are what we call until tested, right? It'll stop when the market comes back and tests those areas. Now, really a crude explanation, right? There's a little bit more that goes into it, but on a very basic sense, is it's where the point of control is going to appear in a bar, right? So basically, On the green candle, it's going to appear somewhere near the bottom. All right, on the red candle, it's going to appear somewhere near the top. Now we do have, other functions as far as looking at the previous order flows, but crude way to look at it is point of control is near the bottom, right? It's indicating support. That's where your volume is appearing. Point of control near the top of the red bar is where your supply is appearing, okay? And you can see oftentimes it's kind of a nice indicator, a sign of markets are sort of coming back, here, supply coming in, gets bid back up, supply comes back in, supply, market drops, finds some support, gets bid up, finds another support area, supply is coming in. That's a very crude definition of it, okay? But if you're using a regular footprint chart that doesn't have, the prominent point of controls, that's how you'd look at it, okay? So basically, in a nutshell, right, that's one of the ways that you would use prominent point of controls on a footprint chart that doesn't have it programmed into it, okay? I mean, ours does have it programmed in, and it's a nice tool when you start adding in other parts of order flow, right? It's an imbalance reversal here, coming in this 53, so it's showing you there is some support there, just as this is an imbalance reversal coming in right here, right? So this one's bearish, this one's bullish, okay? This morning your charts were covered in levels, every few ticks up and down. This chart is relatively few. Which levels display? Well, it really comes down to what you want to have on your chart, okay? If I just want to look at, for example, prominent point of controls, that's what I have up on here. Now you could add things in here. The nice thing, if you will, is if I want to, okay, I'll say I want to see imbalance, prominent point of controls, and bars with imbalance reversals, okay? So what it's going to do, right? That's why we have these little plots that appear above the bars. So I mean, it'll still plot the regular, right? The regular prominent point of control or imbalance reversal, but now what it's doing is highlighting with the double plots, right? And plus I can see the colors here. The bars that have both imbalance reversal and a prominent point of control, here, 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 right? The two, okay, the two. Any earlier, and there's one here, right? If that was all you wanted to trade, you can see there were some nice trades to be, had later in the day. Earlier this morning, there was one up here, okay, that moved down. So again, it's all depends on what you want to add to your chart, but only add things to your chart, even though we got a lot of tools in the software, and not just my tools, but NinjaTrader itself's got how many different indicators. Right? Just add the pieces that help you understand what you're seeing in the order flow, what you want to see, right? So again, say I want to just see prominent point of controls and bars that have the imbalance reversal, okay? We haven't gotten to the point yet where it's just going to show the bars that have the both. That's probably, that's something that I want to work on in the new year as far as the software, where you could just filter out all the rest of them. But for now, that's just how it is until we get to that point. That's a little bit more programming. And the problem is with NinjaTrader, sort of the more programming that you do with it, it can affect, obviously, the performance. So basically, Chris asks, can you explain abandoned value area, abandoned point of control? Well, basically, all it means is it hasn't been retraced back into. So for example, this is an abandoned right here in the middle, okay? Here's a prominent point of control that's abandoned, right? The next bar hasn't traded back into that point of control. That's what we mean by abandoned. Now, if it was a value area, right? Same thing. Does the next bar go in and retrace into it or not? That's the definition. abandon. Erwin, which lines areas do you extend until tested? Well, it really depends on what you want to focus on. You could pretty much do all of them. You have your choice of pretty much everything, whether you want to have it extended or not. Generally, things that are going to be support or resistance to me, I would have extended. Things like buying and selling tails, not so much, even though buying and selling tails are signs of bad structure. I just keep them fixed. Divergences, no. Exhaustion prints, you can actually. I know one person that trades just exhaustion prints. He was so happy when we had that drawn out because that's all he looks at, just exhaustion prints. And he trades them the same way that I've been talking about trading the abandoned value areas or VPOCs. So you can do that. Imbalance reversals, yeah, I do until tested. Same with the inverse imbalance. Market sweeps, you can. It's similar to a stacked imbalance. Weakness, you don't really need to. Sequencing, you can. There are some nice trades that happen when you do retrace back in there. But again, it really comes down to what you're using, because not everybody uses all this big list of indicators, right, of order flow tools. So find out what, because it really depends on what the market you're trading, the time frame, what you want to be looking at. There's no one right answer. Bala, no, I don't use the trade detector in Ninja. I can't really answer that question. For beginners, Chris, that's a very interesting question. Well, what markets do you recommend for beginners? Well, for beginners, I would stick to probably some grains, or even 5 years. I used to recommend traders beginning, 5 years is a great contract. ZF, here, got it. ZF chart anymore. ZF. But again, I used to recommend this when the market, it used to be a much quieter market in the sense of movements. But it's a nice contract because there's size at every level. Okay, you can get out of a position because when you're learning to trade, right, you want to be in a market where if you gotta get out, there's an area you can get out without too much damage. Now, obviously, if you're trading this during the Fed announcement or something, well, you shouldn't be. Any interest rates when the Fed is talking, you want to stay out of. But there are these movements, in my opinion, are pretty true. It's a slow moving market, so it's a good one to sit back and watch the market develop, right? And again, it trades in quarters of a tick, so it's only like $7 a tick, 781 or something like that. So you can. It's a good market to sort of cut your teeth and get used to things on here. I mean, just look at how these prominent point of controls are working out, quite nicely on the way up, back on the way down. There's a few other things here. There's a nice thin print coming in here, 0, even here, 0. It's a nice market to get acquainted with, with order flow. It's a nice market to trade. But again, there's a lot of nice markets to trade. But if someone was like new to trading, I would not recommend MES or definitely not MNQ. I'd say 5 years ZF. The problem is it's a slow moving market, and everyone likes things that moves faster. John asks, prominent point of control and point of control. No, they're two different things. Yeah, a point of control moving average, it's funny because years ago, I used to work, I say work with, but I helped the guy at Emoji Trading, Lee, come up with some products. I don't work with him anymore, but one of the ones was sort of this point of control moving average. And yeah, it's interesting. I mean, it's just another way to utilize it. It's again, it's essentially just it's like a weighted moving average. No, John, right now I don't have a plan for Sierra charts. I said, yeah, again, I was working with Lee at Emoji, but he sort of went in a different direction as me, and we don't work together anymore. Even though he still got my name on his website and his products are my products, I don't have any connection with him anymore. I don't know. I've got my hands full with NinjaTrader. Unfortunately, I'd like to get a version out for Sierra charts, but the problem is finding a programmer that understands order flow. There are a few, but it does take time to get everything, with testing and all that. I mean, Sierra charts is great for more experienced people, but for beginners, it's kind of a nightmare. Okay, just really quick, Ethan, are you looking to enter on a retest to a key price, or you get in towards the first batch of signals? Depends what the key price caused it. Sometimes I do look to get in on a retest, but generally not. I'm basically, once I get my signal, I'm taking advantage of the information as it's happening. So if I see that abandoned value area, say that VPOC, prominent point of control, it's go time. Value area, well, value area is the old market profile term, John. It's the area in the bar or on the trading day with 70% of the volume. Okay, now you could go down to a bar level, and it's where 70% of the volume is. Bala asks, trade mostly based on support and resistance, value area highs, previous days. What are the best settings in your latest order flow you can use for this type? Well, you could stick with, I mean, the default setting is 70%. Okay. I have experimented with other value area percents, 35%, 50%. There are some useful tools. Honestly, if some people have asked me to come up with an indicator just to see the VPOCs, okay? Not just prominent point of controls, but just the regular ones like this one. You can do that. Actually, there's a way to do it on the software. So it's a workaround. It's not in there yet. But if you were to go to, you'd have to turn on value area, and you'd have to make the value area as small as you could, which is 1%. So here you're going to see the VPOC here, the VPOC, the VPOC, the VPOC, VPOCs, right? Which is a support or resistance level by itself. Okay. Any top ones I suggest instead of all of them. Yeah, okay. If I had to make a list, top 3, it would be prominent point of controls, since we obviously point of control is an important level. I like exhaustion prints. Honestly, I can't make a top 3 because if I'm trading a 5-range chart, right, I'm not going to rely on sequencing so much. Whereas if I was trading, a minute-based chart, I may rely on sequencing more. It's point of controls or prominent point of controls. If I was trading a market like bonds or 5 years, exhaustion prints are going to be more important, right? Because these are markets that trade a lot of volume, and if I see not a lot of volume coming in at a certain level, that's important to me. So again, definitely top of the list is going to be point of controls, exhaustion prints, and even imbalances. Okay, I could go into, maybe tomorrow I'll spend some more time talking about imbalances. So basically, John, real quick, difference between a prominent point of control and a regular point of control is prominent point of control carries more weight. It's more indicative of support and resistance in the market. All right, so let me just go back here now to sort of recap these trades. Again, these trades I'm going to put in a file for you that you can sort of download. But again, just want to go through them really quick because they were quite interesting. Yeah, I had one trade earlier this morning after I woke up here. Mondays are always a very early day for me. I usually wake up around 5. we had the swing high here, came down. We had a slingshot point of control as well as, you know, a prominent point of control. I just got long off that, right? I knew that this is a range-based chart, and when we're trading 3.5, chances are it's going to go up because I know that if we come down here, right, it's not going to be a green up candle, it's going to be a red down candle, right? And I did know that chances are we're going to, if we did test it, right, I'm not going to be filled and then test it, because on the range-based chart, it would have to keep moving in that direction. But that's the trade that I took off of the swing high. I was looking for a turning point in the market, and I got it with that bullish prominent point of control, which was actually a slingshot point of control, coming in here to, you know, catch that move back up to that previous high. And then the next trade here, again, we sort of started selling off. Then, you know, we came back up. I had an exhaustion print here, the 7. I had that imbalance reversal here. I like that the market is sort of coming down, it sort of pulls back up a little bit. Then I get that exhaustion and I get supply coming in. Looking for the market to sell off. I mean, again, I have automatic take profits and stops thrown in. I wasn't adjusting them today just because it's, you know, when I'm talking, it's hard. But there was more to that move down. Potentially could have got, but you know, it is what it is, right? I just took whatever out of there, 8 ticks. Same thing here. I have this prominent point of control coming in here. I had the stacked buying imbalance. I got the declining volume, 40, and then 2. The aggressive buying coming in, and then I got this bullish prominent point of control. But again, I wasn't looking at this bullish prominent point of control here because I was already looking at this double bottom with less volume and the stacked imbalance. We had traded up. I remember I was talking during that time, traded up, then we're coming back down. I dropped in that buy stop back in here at 60 in case we were to come back up. So it filled me. Then it made that move up here, went sideways. Again, this one, there was more to that move. Much more, you know, it had a nice run up in the British pound. But again, you're starting to see, you know, some of the things putting it together, right? You had the stacked imbalance, you had the declining volume over the double bottom. You know, then obviously here you got that bullish point of control. If I wasn't already working a buy stop to get long in there after this bar, then yeah, I'd still be looking to be buying somewhere in there around 60, 61. British pound, just go, you know, I had that losing trade. This is trading. You know, this is what happens. I got short, right? Similar type of trade to the euro currency, right? We sold off, rallied back up. I got the exhaustion print. I got that imbalance reversal. I got short in here at what was that, 88. I had my stop up here at 97. It literally just came right up to my stop. Traded 3 contracts. I was one of the 3. Whoop-de-doo. And then it sold off. Okay, I tried to get short again down here at 90. I think I threw in an offer there at 87. I just didn't get anything. It traded back up to 86, but by that time I had canceled it because, you know, if I'm trying to get in on a reentry and I miss it, then the market sort of makes a move, right? We drop from 87 down to, you know, 78. I'm not looking for it to come back, get me back in, say, oh, hold on, Mike, you know, here's your opportunity to get short, and then make that move. I canceled it. If I don't get in, or if I have a level I'm trying to get in and it doesn't happen within a couple of bars, then I just cancel it. But this was just unfortunate, right? It just came up, stopped me out, and then made that move. Again, here earlier, there was this balancing taking place in here, right? Got 1, 2, 3, 4, 5, 6, 7, 8 bars with the value areas overlapping. That's these darker or lighter red zones, the green, right? They're just overlapping, going backwards, right? So green bar, red bar, green bar, red bar, green bar, red bar, green bar, red bar, green bar, red bar. And then the value areas are more or less overlapping, right? You can sort of see the point of controls are kind of around the same area, sort of around this 122.95-ish area. Then we broke out a little gap in the value here. Okay, and we made a little run back up into this value area, right? This abandoned value area. We're still just below it. And then I got that exhaustion print. Okay, it's time for me to get short. I was a little late on the entry, I believe, because I was talking, but nevertheless, I got short here at 84, and within the next couple of minutes, it dropped down to my target. Again, dropped a little further. You know, there was some convincing order flow. Again, abandoned value area here, abandoned value, abandoned value, abandoned value. Then it reversed down here. Right, this was this nice little double bottom. I didn't take a trade off this. I remember talking about it, but I didn't take this trade. You know, there were some nice trades to be had there. Let me see here. Let's go over some more questions before we end it there. But this is nice. I like these questions. Let me see. Where did I leave off? For each different futures contract you're involved in, how many distinct trades a day do you make for each? Clearly, you may do more in a busier. Yeah, it's hard to say, because you know there's times where I'm a little bit, I don't want to say more aggressive than others, but if I was like today, for example, on the ultra bonds, that's 5 minutes, but let me go to a 5 range chart. If I was looking at the 5 range chart this morning at that time that we were doing it, there isn't going to be very many trades. I mean, there was a nice trade down here between this 8:30 and 9 o'clock. But in here, right, again, this is junk. We're just sort of going sideways. But then after that, down here, there's nothing really, in my opinion, tradable one way or the other. Okay, you start to break out here, and maybe a little short trade to the downside. But that was already, this is 10 o'clock here. So there's really going to be, if I'm looking to trade only between 8 to 10, on a 5 range ultra bond chart, there's really only one trade to be had. Whereas on the currencies today, there were more trades to be had within that time period, because after this move, this market is just going sideways for the next hour. Okay. So it's hard to say. Christian asks, the basic service for Kinetic 69 is sufficient for trading futures. Actually, it's cheaper to just open an account at NinjaTrader brokerage if you just and get the data from NinjaTrader. You can just go into your account settings at NinjaTrader brokerage and you can sign up for it. It's not that much. I mean, you're actually going to be paying less for a real-time feed, because the basic service at Kinetic, I think you're paying like what, $50 a month as your base, and then you're still paying the exchange fees on top of that. Whereas I know with NinjaTrader brokerage, I've even got the depth of the market. It's only 10 levels, I believe, for CME, CBOT, NYMEX, as well as Eurex. And I'm only paying around $65, I think, a month for it all for real-time feed. So I'd look into that. Just fund an account there at NinjaTrader brokerage. You don't even have to trade through them, right? You could just open the account, put in a couple $100, maybe once in a while you trade a couple micros a month, but because I think they used to have a fee for traders. You'd have to trade like 10 contracts or pay $10 a month or something. Just one day a month, trade, flip 10 lots in the micros. Do you prefer trading ZB with time base or range base? I look at both, but time base and range base. It's hard to say which one I prefer. Sometimes I'm going to see some stuff that I don't see in other charts. John asks, I've been a student for years. Thanks, John. Amazes me how order flow can shift against you so quickly. Yeah, all indications are bearish and you get a huge bearish delta, and then pow, very large positive deltas come in and you get taken out. And then down she goes. Yeah, that's the problem with trading now. It's very anonymous. Right? You don't know who's on the other side of your trade. You don't know that as soon as you get long, if there's some guy sitting on a trading desk somewhere that's got, 500 lots to sell, right? Literally right after you get into a trade, that happens. Whereas before, when there's a trading pit, and if you did have access to a floor broker, they could tell you that information. Oh, so and so is selling and stuff like that. Whereas now, yeah, there are times you do get blindsided, and that's why I tend to stay away from some of those equity markets. It just happens to me more. At night, what do you trade at what times would you recommend? Well, at night, I think micros are fine. MES is fine to trade at night. I'd stay away from the NAS, MNQ, and the micro Dow. But MES trades decent. There's decent volume. It's, on slow days, it's like watching paint dry sometimes. But you tend to you can get 10-point moves during the Asian session. It'll quiet down around midnight Central Time, so Eastern, basically just before Europe opens. And then obviously once Europe opens, MES trades nicely. Obviously currencies are going to trade nicely. Jap yen, Aussie dollar, I think pick up more during Asian session than the European session. The British pound during London hours, Euro currency during London hours. A lot of these contracts do have some nice movements overnight. Henrik, CME level 1 or $4 a month, no pro. Yeah, I mean, that's the problem with crude oil. It's one of those things where there's a lot of these external factors that you have no control over, and you don't know when it's going to happen. You don't know if some oil line is going to burst or something. And trust me, by the time you find out, the market's already moved. And things like that happen from time to time. Yeah, they run stops as well. So, I mean, that's part of the problem trading during illiquid times is you can get a little bit more volatile moves than during the US time. So anyway, guys, I'll end it there for now. I'll see you guys again tomorrow morning at 8 a.m. I'll get these videos posted up, and I'm going to work on that sort of the setup sheet, so you got something to take away from this, some setups that you can look for with the examples. One last question here, Ron. What tools do you recommend to start out with? Well, start out with the order flow. You got a lot of tools in here to deal with. If I was going to start and say, okay, what do you recommend I look for? Use exhaustion prints, prominent point of controls, and go from there. But trade a regular market. I wouldn't start out with exhaustion prints in wheat or soybeans or something like that. Stick to the major markets, the ones that have the normal volumes, right? I mean, when you start looking at some of these other markets, they're very specialized. Let's leave it at that. But I'd go through them and find out, because it also depends on what type of chart you're using. I don't want to say, oh, use this and this, but you're looking at a chart that is probably not going to be conducive to. So it really varies. So anyway, guys, I'll end it there for today, and I'll catch you guys again tomorrow morning. Bye-bye.